The nation could suffer a direct hit from an official recession next year, according to economists. To make matters even worse, professional money managers expect the economic landscape to be characterized by an uglier condition called stagflation. In a recent survey, 98% of American CEOs said they're preparing for a recession. A Bloomberg economics forecasting model has determined there's a 100% chance of recession next year. And a number of the world's leading economists, including former Treasury Secretary Larry Summers, say recession in 2023 is a virtual lock. However, in recent polls, professional money managers are projecting something even more ominous than a garden variety recession. Asset managers say the economy will be forced to deal with stagflation, low output and high inflation at the same time. In its most recent monthly survey of fund managers, Bank of America found that 92% of them expect stagflation within the next year. And none of the respondents said they're anticipating a Goldilocks environment, which refers to an ideal mix of low inflation and robust growth. Another survey, this one from Bloomberg, also found that stagflation is the leading expectation of asset managers for 2023. According to those results, 50% of professional investors said they're planning for stagflation next year. Another 36% see a deflationary recession instead. Nicole Kornitzer is a portfolio manager at Kornitzer Capital Management, Inc., which oversees roughly $6 billion. Ms. Kornitzer makes clear what she thinks the economic environment will look like in 2023. Next year is still going to be difficult. Definitely, stagflation is the outlook for now. When you look at next year's forecast for economic output, inflation, and unemployment, it's easy to see why so many money managers are planning for stagflation. For example, the Conference Board says we'll see 0% economic growth in 2023. An economist at Fannie Mae expects GDP growth of negative 0.6% for all of next year. As for inflation, projections for 2023 from the world's leading investment banks run as high as 5%. Steve Hanke, who has accurately predicted inflation's path up to this point, expects CPI to be 5% heading into 2024. And it's projected that all of these interest rate hikes will finally move the unemployment needle higher. The Philadelphia Federal Reserve Survey of Professional Forecasters expects unemployment to move up to 4.2% in 2023. The Conference Board sees it climbing as high as 5% next year. All of this adds up to a potential case of stagflation in 2023. Our best guess is that we're going to be in a period of stagflation through most of next year, said Christopher Smart, Chief Global Strategist at asset management firm Barings. We think that the battle to get inflation back down again is going to be hard fought. Economic volatility has already wiped as much as $10 trillion from Americans' net worth here in 2022. We can only imagine how much more destructive that volatility could become if next year is, in fact, cursed by the perfect economic storm of stagflation. We'll be sure to keep you informed. That's why I suggest you take this opportunity to learn more about what's going on in the economy by attending our one-on-one educational web conference at AugustaPreciousMetals.com/webconference.